Welcome to another Pixel Storytime TikTok style. So this is another true story, and yes, I have received client permission to tell it. So there's a lot to unpack with this one though, so I think that there's going to be more than one video. There might be 3 videos. We're going to wait and see how it goes because I want to make sure that I explain everything clearly. So this story starts a lot like the last one, in which I was doing a tax return and I noticed some payments to a life insurance policy in the books that I wanted to ask the client about, which I did. And he explained that these were key man insurance premiums for the business for which the business is the beneficiary, and that his financial advisor had told him that these were tax deductible expenses. Hold the phone. I pumped the brakes and I was like, wait. That's not true. As a matter of fact, there are only a very specific set of circumstances that allow a key man insurance policy to be tax deductible. And one of them is that you have to be a C corporation, because a C corporation is going to receive those funds and have to pay taxes on them. So yes, they would get the expense, the tax deduction for the premiums. But outside of a C corporation, most of my small business clients are not C corporations. You're not going to see a taxable event happen if those funds are distributed for whatever reason. So the government's not going to allow you tax-free income and then allow you to take the tax deduction for purposes of reducing your tax liabilities. Okay, it's just not going to happen that way. They're not going to let you double dip that way. Now, we did have a meeting with another representative of the same financial firm that his original financial advisor works for, and was able to take a look at the policy for us. And he noted that it had been set up as if this client was a C corporation, which he isn't. However, if the financial advisor was under the idea that he was a C corporation, that might explain why he was telling him that these were tax deductible expenses. But my client is very, very clear on what kind of tax structure he is. So I don't think that he would have told this person, who again, I have an issue with, that these were that he was a C corporation. So all kinds of issues there. The next issue was that these were very high premiums, $850 a month, over $10,000 a year. And I thought that was strange because typically you don't see them that high for small business owners because you're using a term life insurance policy in order to cover the key man agenda. All right. In this case, it turns out that this was a permanent policy, and specifically a variable universal life insurance policy that is really meant to build wealth, not be a key man insurance policy, which is in place to protect your partners, which I'm going to talk about more in part 2.